All right, hey guys, Sam with you here. Mid-morning here on a Thursday, March 15th. So as we do now, we put the voting out to our members to see what coins they'd like to get reviewed in video form. So winner today, one of the two, was STRAT to Bitcoin. So I've got STRAT up here. This is the 8-hour STRAT to Bitcoin on Bittrex. Now, we've done this coin previously, not too long ago, and it's just this continued drift lower here as we sit. So I'm not going to dig through all the technicals that were involved here. It was actually quite technical on the way up here, and we're seeing equally technical trading on the way down. So rather than dig into this, we'll focus on the right edge of the market here, but we just want to get some perspective. So it's always a good idea to just pull back and go, okay, this didn't work out. There was hope that this was the start of something. The retracement was deep, and we had a couple of false starts on it, but it just has continued to fall. So one thing, if you want to be in the spirit of keeping things simple, I suppose you could, make a statement like, okay, we're coming back to this long-term support zone. Well, you can call it an accumulation zone, where strong hands that can sustain here will start accumulating here on the anticipation for the next move like this. I mean, zero's down here, so not too much farther to go. If you're a believer in this project, and there's certainly a lot of evidence to support it, I'm over here on CoinGecko, where I like to use it as a reference. We're at 56 on the score here, 62, strong interest amongst the development community. Market cap 460 million. It's a strong project. So, we're in the malaise of the whole crypto bear market since the beginning of the year. So if we come back and look at this, when do we peak here? That's January 15th. And much like most of the alt complex, and really you could say crypto in general, we've just been drifting lower. So are we back now to this support zone? Well, if you're not holding and riding through all of this pain, this is not an unreasonable place to start accumulating again, just based on you would have to have a longer-term belief in the project. And just looking at prior areas of support where the market has gotten this low, people say, okay, that's low enough. That's an area where I want to start accumulating again. And we're awfully darn close to it. So you can see the last time we got down to this area here, well, at least that was the rip. But let's dig in a little more closely. So what we want to try and identify is there any technical pivot down here? Do we have some confluence to support this, not just in the most simple of views of the market, which is this longer term support that we may be approaching here? But can we create any technical confluence here from a swing trader's perspective to see if we can line anything up to warrant taking that position from a swing trader's perspective? So I'm going to dig down here. I'll go next to the 4-hour. We can probably take this off, and let's open this up a little bit. So let me do this here. So we'll work through this series here as we've come down. So it's pretty straightforward. So, when you're first bringing up a chart like this, and as I will often suggest, it's often a good idea to just go to a blank chart, and it gives you fresh eyes on it without the influence of any prior work that you've done, whether you had trades that were profitable or stopped out. It's a fresh look at it. So when we first look at this, the thing that's, clearly we're in a downtrend, right? So we've got a very, very clear series of lower highs, and lower lows, all the way down, right? So the definition of a trend, downtrend, as it were, here. So we just start looking here, and we start looking for threes. We know the fundamental basis of the entire Elliott wave theory is that markets trend in fives, they correct in threes, right? Motive waves, impulse waves, diagonals, fives, we correct in ABCs. There can be complexity to it, but we can see some very easy areas where we can spot out some threes. So we can certainly look at this and we can kind of start reverse engineering. Well, there's an ABC, and we can see that pretty clearly. Here's another one, ABC. We can see that one pretty clearly. This one's not as clear, but Certainly it's counter trend. We might have to dig into a smaller time frame to get that one a three-way, but these two are very obvious. So let's look at that and see if that helps us at all in terms of the technical nature of the move lower. So if I just, as you would with any chart, just taking swings, right? So if I take swing low to swing high, all right, what do we do? Right to the golden zone. All right, so there should be no surprise. That's where the algos are going to kick in. They're going to defend it right, and they take it right up to the 65. And this is, I've shown many, many times. Look at the reaction coming out of there. The reason you're getting that reaction is because here's exactly what they're doing. So now granted, we're on a 4-hour chart here, so I understand that. But here's what's happening. So the people that were short, they put their stop just on the other side of the 618 because they know that that's a common pivot zone. If a market's going to reverse, 618 is a common zone. Now they've read that in a book or just from their own analysis or from looking at charts. So they'll put the stop there just on the other side of the 618. So what's happened, the reason the market so often will go in between the 618 and the 65 is that you just have a stop run there. So algos know that. They know those stops are sitting there, which is why they will tend to pivot between the 618 and the 65. All right, so you can see here, we don't get to the 65, but everyone who was short here, who had a stop just on the other side of the 618, gets taken out. And then look at the reaction, right? So that's kind of the FU from the algorithms or the traders that have written those algorithms here to say, oh, you're out now. Look how right you were in the long term, right? So we get you out, fill our orders on your stops, and then down we go. It's just what they do, right? So again, it's not personal. It's not like they're trying to get you out. They're just trying to get people that don't know better. That if they can get those stops there, they're going to get them, and then look at the reaction. So you can see the first thing that's very clear. So from the algorithms that were sellers there, now they start at the 50, as I've shown this many times. They start at the 50. They'll defend up to the 618. So here's their target right here. So they go from this sell here right to the negative 23.6, and we get the reaction. Now, a reaction doesn't imply that the move is over. It doesn't mean that we're doing that. I mean, it could mean that, but in this case, you can just see the reaction here. So we get the buy programs kick in here. Now they're from the short sale here. Now they start taking profit. That produces buy orders. All right, so first target is achieved. Well, it rolls back over again, so it looks like we're heading lower. Well, here's the second target from that very first pull. Here's their second target, the negative 618. Bump, little reaction. Well, we've got more to go. Well, here's the extreme target. So this is the 1618, as I've shown this many times. If we go to the 618 here, if we measure the length of the swing from the pivot here, well, if I pull this all the way over, you can see that we get it on there. So we get this zone down here. So we get this confluence where we've got the negative 618, pardon me. We've got the negative 100 and the 1618. We get it's the box here. This is for wave threes. But the confluence sits right here, where we would have this pocket here where all working off of the first swing and the retracement. First target, second target, third target a little bit lower. Now, just because it's there doesn't mean that we must get down there and tap it, but you want to know that that's there. So let me pull some of this off. So here's what they'll typically do next. So working from the swing, now they'll just work from the last pivot. All right. So they'll work from this pivot. Excuse me. So from swing high to swing low. Well, this looks like it's front run. Now we get the 38 here. So from an Elliott perspective, if this is a 1, 2, 3, and we get an ABC into the 4, that makes perfect sense. But I want you to notice this as well. From this swing here to this little pivot here, if I get it right on there, you see, let me blow that up a little bit so you can see it more clearly. So do you see this here? This is them selling the next 50. That's in effect what they're doing. Let me get this right on it. Okay, so we have this, so we get this move down here, then we get this retracement up here, and then we get a slight front run. Yeah. We get a slight front run on the 50, and then here's their target. Do you see that? So we have a second time where they've done the same thing. It's a front run, as they will almost always do. they'll front run, rather than have it tap the 50, they'll front run the 50 by just a small margin here. And then here's the target here. You see that from the 50 to the negative 23, reaction. Do you see it? I mean, once someone shows you this, you know, you can't look at the market the same way ever again. It's like the code has been revealed to you. So, you know, you're welcome. All right. So there you go. Right. As it was taught to me, now I'm teaching it to you. I didn't discover this. It was taught to me. Well, there you go. Right. So you're going to see this over and over again. So let me take this off. Okay, let's zoom back out. I just want to show you that because this is why that matters. Because see, here's the pivot here. So what they'll typically do is use that pivot. Let me take this off so you can see it. So this will be the next pivot that they use. So we go straight down. Here's the ABC. Now do you see how that lines up? This was the last 50, hit their target. Now they're using this. Right, here's the swing right to the 50. Now here's the front run. See, they do the same thing on the target. Right, so here, if I can get that hot, we get right here. Right, so we saw the first one. Here's the second one, target. They front run the target, reaction. Now it rolls over again. So we still going? Well, what would that? So in that sequence, we can see what they're doing. So here's the front run. Here's the front run on the target. Now we're coming up short. So we got to look here and say, okay, well, if we're coming up short and we've had this move, well, from an Elliott perspective, and we're going to get there in a minute. I'm trying to show you how, you know, this is a good example of combining the two. What dictates? What are the algorithms doing? And the Elliott wave is to help us try and figure out where they are and then look for those low risk, higher reward, or at least the kind of risk reward that you want to look for in the market. We use the Elliott wave to try and position ourselves to just tuck in and get behind what they're doing. So if I look here and go, not quite to the 50, what else could they be using? That looks like that's something we want to check right there. Okay, so here's the next little pivot here. That goes right to the 50. Here's the negative 23. So they get it again. So they are doing nothing but making money the whole way down. So they got this one, this one, this one. Oh, they also got that one here, that little one that I showed you. This one, this one. They're pigs, you know, just they're having a heyday. Okay, so we can see all of that happening here. So they have done nothing but make money on the entire way down. So within that downtrend, you know, whenever you see this series of, you can almost see it just with your eye of, here's your first lower high. Here's your next lower high, lower high. Do we have another one coming? Well, you know, we'll have to wait and see. But now we can start looking at this and go, from an Elliott wave perspective, can we make sense of this to help us identify a potential pivot down here? So if I now start looking at this with an Elliott perspective and look at what's happening here. So I could say potentially I've got a one wave here. Here's my ABC into my 2. Well, here's a deep impulse wave here, potentially my 3rd. There's an ABC for my 4th. And now potentially I'm coming down here. Could that be the 5th? Or do we have to go down and tap that zone down here? Well, let's take a look at that. So if I think about this, well, there are a couple of things I see right away that I want to pay attention to. If that's my one wave, well, look what happens here. All right, so we get the C wave, but we don't overlap. So what we see happening here is we have an impulse wave. So we have a 5-wave structure heading down that, you know, is trading with perfectly technical precision. So now if we look at it with our Elliott hat on, we say, well, the length of 2 to 3, the length of the 3rd, I should say. Right, so here, this now starts to make sense from an Elliott wave perspective. So I get my 3-wave counter trend. I got it here, and I get it again here. Goes right to where you would anticipate the 4th. And note how technical this is in that we don't overlap the 1. So I get right to the Vegas wave, right to the 38. I'm at the highest probability zone for a 4th wave between the 23 and the 38. I get this little cluster. I've got this prior resistance I know that's sitting up there, and we roll right over. All right, so right after that ABC. Now, additionally, you know, these are the kind of things that you kind of want to check. You're looking for that confluence. You see what happens here? So I get my little ABC. Here's the 100% most common target here. So I get a little confluence between the 100 right? The alternate price projection, most common target for the C is to equal 100% the length of the A. We get right to it. Now we get a little through it. There's the 38 sitting on top of it and the Vegas wave. So if I zoom in on that, what you're seeing here is confluence. Do you see that? All right, so we've got the Vegas wave, we've got the 100%, we've got the prior swing low of the wave 1, right? And we've got the 38.2, all sitting in that little pocket. So let me zone out a little bit. All sitting in that little pocket. All right, here we go. So actually, let me get that dialed in right there. Now, the only other thing you might look at there, because I can just kind of eyeball it and say, well, get that hot. You gotta look here. I've got 3 pivots. I want to consider, no, that's a modifier. I want to go to my original and see if I've got any market geometry to help me there. Well, we get a little to and through there. So here's my 1.5. So if I pull back out, you can certainly make a case here for a pretty stiff confluence zone. No, it's not spot on. It's not spot on the median line, which would be ideal. I would check the modifiers just in the process of going through this, checking these. That's too far. If I go to modified shift, and then I would put the 1.5 on that, and that gets it to the tick. So seems to be the 1.5 is what they're working off of. We get to and through. Now we're down here, so it's no longer in play here. But this, definitely you had some confluence there to support the idea that you were approaching a potential pivot for this to move lower. The 3-wave structure being the dominant tell. And then this little confluence as I just showed you. So let me pull back out. So let's get back to where we are now. All right. So if that's playing as my 3rd wave and that's my 4th, well, I've got an extension here in the 5th. So let's check that. So let me pull some of this off here. Okay, so let's be sure now. So we got to check that. So we got to look at the length of the one. Come here. Length of the 1 wave projected from the 2nd wave. Okay, so we know for sure that the 3rd wave is longer than the 1st. So despite the extension in the 5th here, this still plays in this format here as a 1, 2, 3, 4, 5. So that makes sense. So then we just looked at the 4, so we know that's good. So now what we're looking for is, can we find any common zones down here where we can start to build a case that we've got a potential pivot down here? Well, common target would be the length of the 1 wave projected from the 4. So if I put that right on it, if I get it right there we go. Okay, well we're smack dab in between. Well, here's the 618. We see we had a little reaction there, but we've had this additional extension. So does that mean we're coming back down here to get our 5th a little bit lower? Well, that would be spot on perfect. Now we do have to deal with this as a variable. Okay, so we look at this. So we know we had, if I just do it quickly here, we had 1, 2, I think we had 3, 4, 5. I think we had an expanded flat here. I've done that coin before. So yeah, that looks like we had that portion of this coin before. So we had a 5-wave sequence here. So given that, so your first question is, wait a minute. You just told me that the whole foundation of the Elliott wave principle is that we trend in 5s. We have motive waves in 5s. We correct in 3s. Well, that's exactly right. So what do we deduce from that? If we've had a 5 followed by a 5, well, we have to step back. So let me just do it this way. So we have to step back here and look at it this way. Okay, so the trend now has been down. We have a long downtrend, right? So we can't argue any longer that we are just correcting this. We've just come too far. It's gone too deep to call this a correction of this impulsive move. So we have a long-standing downtrend. So we've got a 5, which was the first indication, the first potential scenario here that we had the start of a new trend. But a 5 followed by a 5 doesn't play, at least in Elliott theory. So what does that leave for us? That leaves for us that this, well, it leaves this as an ABC. So the only alternative here, right, this is where the rule set of Elliott is advantageous here because it allows us to organize this for possible outcomes. So if we're going to play this as a 5 followed by a 5. One scenario is that we've got an A, B, and a C going in. So let me change that, bring that up a degree. So that's a scenario, right, that we might be looking at. Now you got to pay attention to where 0 is down here, because we're getting pretty far down here. So let me get my horizontal line here. So you got to mark off 0 so you don't start projecting into negative territory. So you look at that and say, okay, 5 followed by 5. So potentially here, all I'm doing is setting up an A wave. Otherwise, this is going to be very hard to get this to get a count here that makes sense. I mean, this can't be an A wave. That was a potential 1 wave. I mean, I suppose we could, technically, right? So, we could make the case that as long as we stay above that low, we technically could have this, could still be correcting. We are still internal to the swing low to swing high. But let's look at it and see if it would make sense. So if I put the wave on that, you got to try and figure out, okay, where could I be in this sequence? If I'm going to go up here and put in a B, well, where's my C? Where's my C? Well, we got to be careful, right? So here's the absolute low here. Here's 0. Here's my 0 line. If I get it right, there's my 0 line. So now look, so if we're going to pivot here, we don't know whether we're going to put in pivot here or we've got a little bit more to go here. But let's just use the 100%. So that would be a scenario that you have to consider. If this is an A wave and we get a 3 wave into the B, and we know a B can be anywhere from the 50 to the 786, so we'll split the difference there. That leaves an algo target down here at 21,732. Zeros down here, that would take us below this wave. That would this pivot low. So we don't know for sure that we go down there. We could see something like this. We've seen that in crypto many times where we get the shallow C wave. So we don't want to make assumptions. But this is most likely what we're dealing with in terms of organizing this in an Elliott count. 5 waves up, 5 waves down leads to the conclusion that you've got an A wave. Now, if we get 3 waves here, if we come up here and we do something like that, well, that adds to the credibility of this case. So we kind of have to wait and see. Then 1 more down, we'd be looking for that to finish in 5. So if you're a strat bull, it's not great news because that looks like you've just got more time to deal with. So, even just eyeballing this, now we're out into... again, I'm eyeballing here. So just in terms of the symmetry of the market, that could be June, May, June before we're putting in that low. Certainly possible. So we got to wait and see. Where's the pivot? We don't know where it is. It could be forming right here as I do this, as I record this. Do we get a 3 wave coming up out of this? Now, again, as I've shown you many times, you aren't going to know. You aren't going to know what you've got. So let me take that off until we see what happens here. Do we pivot there? If we do, then we have to kind of stand by for the possibility that we do something like this. If we get 5 waves coming out of here, then we have to reconsider it. We got to reconsider it. We might be back in here trying to shape this as an A, B, C. It's possible. It's possible. So right now, the probability is, because of the clear technical trading of the 5 coming down, that we're setting up for the next 3 wave, and then the finish being 1 more push down. That would be my best guesstimate as to what the roadmap looks like. All right. So the thing with Elliott Wave is you adapt to, as it goes and as it flows. So right now, that's the count that's being teed up. Whether it holds, well, we shall see as it moves. But if you're bullish, now take note here. That doesn't mean that you don't want to consider getting into a trade here, because this is a pretty meaty move right there. If we get the pivot down here at the 100%, and I'm using that just because of the high probability of that as a target for the 5th relative to this 5 wave structure here. If we get, let's measure it. That's not a bad trade. There's nothing wrong with that. If you can be a buyer down here, 0 is not too far away. So if you're a buyer down here and you're just targeting the 618, well, there's 5 to 1. That's with a pretty generous stop. I don't know that I would give it that much. Probably wouldn't. I'd want to see a pivot down here, and I'd look for a reaction off of that pivot. I'd be entering, so you can hear I'm on an 8 hour, so I'd be entering on a pullback, maybe on a 30-minute or a 60-minute. So just that right there's 8.6 to 1, and that's assuming that this is corrective and that there's one more push down. But I'm not saying there isn't a trade setting up there to get long. I'm just saying be aware that if that rolls over here, you hit this resistance, which you know you're going to hit anyway. I mean, regardless that you're going to hit resistance here, you got a major pivot and a major pivot down here somewhere. You're going to hit the 50 and the 618. You're going to get reactions there as to whether bears can push it down again. That's another question. But you've got an 8.6 to 1 trade there. So don't be discouraged if you love this project and you want to be long. That there's nothing wrong with that. Nothing wrong with that move right there. So that's what I see. I think now, you got to come down and dig into that last little move here and see if you can get some confluence down here. So let me just get this to open up for me. So you can see here, it would appear, it certainly has the characteristic of finishing in a 5-way. So we can see that looks like an ABC here. Looks like this is your deepest correction. We can see an ABC here. So again, just looking back, just working backwards, reverse engineering it, which is often what we'll do. We'll take this, that looks like a 1, that looks like a 2. I got to check that. That looks like my 4. It looks like I'm in the process of putting in a 5th. So let me change the color and go to a lower degree so it makes sense. Well, that looks a bit shallow for a second, but I love the 3-wave structure. So if we check it, got to measure, right? Measure twice, cut once. Okay, right to the 38.2. Yes, I know that's shallow for a second. It's 12%, but we see it at 12%, right? 12% of them will only retrace to the 38. So we get a shallow second there. Here we go down. So it blows right through the first target, gets to the second one to the tick. Reaction. So here's that move. Done. 1, 2, 3. Let's check the 2 to the 4. So if I look here, I'm just taking the length of the 3 to the 50 to the tick. Oh, what a surprise. 50 to the tick. Where do we go here? We're to and through. So look down here. Here's the second algo target. So potentially it's lining up down here. They've already been through this. So here's your next one. So you might fatten your target down here a little bit. So, no. All right. So here's a good example, right? This is the fractal nature of Elliott wave. It's waves within waves within waves. Okay. So let's go down here. This is how you fine tune and looking for a low. Do we have the potential here for the 5th of the 5th to be finishing? Well, let's do the same thing, right? That looks like it may have one more. So let's look at it again. Okay, so let me take some of this other stuff off since we're now trying to break it down into the very last 5-wave. So can we just as we did here, where we carved out those little counter trends, can we do the same thing here? Well, it certainly looks like I've got 1, I've got a 3-wave there, I've got my big impulsive wave, I get a little ABC into the 4, looks like I'm putting in another 5 down here. So I got to go to a smaller time frame. Do you see how we're just stacking this one on top of the next? Let's go to a different color. Okay, that looks to me like a good 1, 2, 3. And even I've got subdivision within the third. 1, 2, 3, 4, 5. Good third shaping up there. Let's check the 2 to the 4. That looks like it's going to be shallow but technical. So there's the length of the third. We're between the 23 and the 38. It's a weak market, so it rolls over. Doesn't even make the Vegas wave. But look at this little ABC I get in that. Now we head down. Now, are we done here? Well, here would be 1, 2. This looks like we could be, well, we're definitely finishing with a diagonal. So so I can move this around. So it looks like we've got a diagonal. So let's check the numbers yet again. So I'm going to take the length of the 1. I'm going to project from the 4. Let's pull it over. Well, here's the 100%. We know that's a common target. And look, we just tagged the algo target. Right? Now that algo target, come here, is here, right? It's relative to the length of the 3. Right, we ticked it perfectly. So could they have been using something else? We look here. There's the 50 to the tick. So potentially here. So that does not look like That still looks like that's my 1, 2, but here's a pivot that for whatever reason they decide, well, let's check it. Let's just take a quick look here. That's the 38. Could they have used this? That could be it. It could be here. We have the front run here. We get to the negative 100. So again, it's a process of trying to figure out what are they using? Why does it pivot here? If they're using this pivot, down we go. There's the 50. There's the target. They're to and through. Now we're getting a reaction again. You know, you just start stacking these things on top of one another. So we look again. So can I go down yet again and get one more range out of this? That's too short to be the third. So it looks to me like we're putting in this. So I would mark off that as my first. Man, I know I'm running long here. I didn't mean for this to go that long. But we just, you know, it's just unfolding right before your eyes. So we look here. Well, there's the second. We know the second can go between the 50 and the 786. Then we roll over. Where do we go? Right to the negative 618. Right. So right to the negative 100, which we know. Look at the reaction here. So we get length swing high to swing low. Here's the 2. We get the algo target here to the tick, reaction. Then we go down here. Now look what we've done here. So again, this is where just having that eyeball reference. So we can look at this and go, okay, length of the 1 projected from the 2. Where do we go? Right? Where's the highest probability zone for a wave 3? Between the 1618 and the 175. Right to the pocket. What happens? Reaction. Right? This is just putting it together. This is the work you got to do. You want to be a trader? Well, here you go. Here's the job. You willing to do it? Let me get that in there. Is this 4 going down for 5? So, you know, this takes us all the way back to, you know, where we started. Do you want to be trading? I would probably do this. Yeah, that's going to be my 2. We're waiting for the 4 there. And then it does not look like it's, so you get a little channel here. We don't know where the 4 pivots yet, but odds are we're approaching it here because we're taking the length of the 2. Now we did have this little funky, if this is 1, 2, we're getting a 1, 2, 3, 4. Likely there's one more push down here, right? That would be the odds play, that you'd get one more push down into this pocket. Now you can say, God, man, that's a lot of work. Why do I really care about doing all of that? Well, you know, that's where you've kind of got to think about what kind of trader you want to be. Are you trying to get down here to this granular level where you can really fine-tune that entry? Or do you just want to go back to where we started, where we were sitting on an 8-hour and go, okay, well, we're back to, you know, prior areas where buyers kicked in. You know, do you want to be that simple about it and go, okay, we're back to right where we started? Well, we're back to where people thought it was cheap enough to start buying. You don't want to do all of that kind of work? Well, that's the simple approach. You know, has it been here before? Yes. What happened last time it was down here? Well, the first time it was down here, we pivoted and then we did that. The last time it was down here, we got that one. Well, we're back down here again. What's likely to happen next? You know, you decide if you want to do that kind of work. That's how I approach the market, because I want to be precise with the entry. As far as I'm concerned, that's right up there with the best things in life. Getting the pivot on a market like this before it launches. Oh man, that's good action if you can get it. All right, your decision. What kind of trader do you want to be? If you want to be a swing trader, that's the kind of work that you got to do. And we can look here and say, odds are there's one more push down. But if you can buy it right there, you certainly have very low risk and enormous upside. It's just the way we like it. All right, guys.